Okay, so looking at GBPUSD, based on how we trade, not just based on how we trade, from a technical standpoint, it's clear that, this looks like a long-term uptrend. Well, we're not trading the whole of this trend down here. We are trading this side of the market. This is one thing you must always be aware of. You're trading this side of the market. And when you look at recent price action for the past, how many months has this been? For the past 6 months, we have only had one bearish month. So 1, 2, 3, 4, 5, 6. So for the past 6 months, we've only had one bearish month, and it tells you, it goes along with to tell you that this is quite bullish. All right. So for us, quickly stepping down to the weekly time frame, remember that we're always trading the draw on liquidity. That is how we look at the market. We're looking at liquidity to be ran. We're looking at the market to take out certain levels of liquidity, and we want to make decisions around those levels of liquidity that the market is actually going to draw on. All right. So when we look at this market, we can clearly see, yes, we have uptrend on this side of the market, and then you can see how liquidity got taken at this level. And now we have the next draw here at 1.26670. Now that is the next level we expect price to draw to. That is this high here. So if we expect price to draw into this high, and we've had 1, 2, 3, 4 weeks in a row of bullish price action, we should expect that price would continually lead us into this level, especially given the fact that, yes, we've taken this liquidity here, we've taken this level, and of course we have a week to fill there. But we're not really talking about the week, we're talking about liquidity here. All right, so this low liquidity has been taken, sell side liquidity taken, the next buy side liquidity we're taking is up here. So this is what we want to see the market trade into. All right, now looking at that, of course, looking at that on the daily time frame, that would mean that we want to see price, we want to be looking for buying opportunities in these areas. I know you might think, oh, okay, why are we not probably waiting for some form of pullback and everything? But if you look at this 1-2 candles here, this look like an impulse by themselves, and of course, haven't taken out some liquidity at this level. That's, you can only see that clearer when you get to lower time frames. But what we want to do is, we do not want to trade against this. You must always go with the momentum of the market. You do not want to be going against 1, 2, 3, 4 bullish weeks. And of course, this here is the fifth one. So 1, 2, 3, 4, 5 bullish weeks in a row. You do not want to be going against this. And then look at all of this bullish price action here. Of course, this was just a corrective phase. You do not want to be going against all of this. So the ideal thing to do in this scenario would be to be looking for buying opportunities in these areas. So probably somewhere around here, give some gap for your stop loss, probably 50, 60, however you trade. Just depends on what you like to do or what you're comfortable with. Maybe somewhere around those areas. And even if you're getting in with a 50 pip stop loss, you still have almost a decent 5-1, or you get in with a 40 pip stop loss, you still have a decent 5-1 trade on your hands, or in your hands, wherever. Just, refining it down to 40 pips stop, you have a 6-1, you have a 6% potential trade on your hands here. So this is actually what I will be looking at. The market could do otherwise, but who cares? You cannot always say, oh, you cannot always talk about, oh, the market is going to do otherwise, and for that reason you don't get involved in trades. No. Clearly you can see the context behind my trade and the reason why I am taking the trade. The reason is simply because we have, number one, liquidity, buy side liquidity up here, which we're expecting the market to draw to, or we're expecting to draw on this. And then we've had bullish price action on GBPUSD. This is what we want to see the market continue. We want to see the market continue this. And especially given the fact that we've had multiple bullish weeks in a row, now is not the time for us to be calling reversals. I don't call reversals. I don't call probably, oh, the market is going to reverse here, reverse there, whatever the hell, all those kind of things. I try not to do that. We could get some sales in here. It might just be a very quick 1-to-1 and all that. But in a situation like this, you want to be going with this kind of move. So this is the best way to look at the market. All right. And just stay with the momentum. Don't try to do anything funny. Don't try to, call the top, call the bottom. Oh, this is where we're going to reverse and all of that. Please don't do that. All right. So once again, please don't forget to like, share, and subscribe our YouTube channel. We're going to be pumping out more content like this, at least looking at the market, giving you education going forward. So please don't forget to like, share, and of course subscribe. Please just like the video and subscribe, and I'll see you on the next one. Cheers.